focus besides IndusInd Bank, and that's Ola Electric. In fact, Ola Electric is declining away in trade. In fact, it fell almost 6.5% there. It's down 6% in trade today. Of course, the company disclosed that the insolvency petition has been filed against its wholly owned subsidiary, which is Ola Electric Technologies. And on the back of that, that stock is declining away in trade. But to get you a lowdown on that and more, we are now joined by my colleague Sumit, who will take you through that story. Over to you, Sumit.
Well, Rosemata has filed an insolvency petition against Ola Electric in Bangalore. Petition is yet to go to NCLT. However, it is coming at a time when Ola is already facing many problems. The insolvency petition is over unpaid dues. So it alleged that there were some unpaid dues and operational creditor. It alleged that these were not paid to the company, and that's why the insolvency petition has been filed. Now, Ola Electric is going through rough time, as it has been reported earlier as well. Around 1,000 employees have been asked to leave. It is going through a restructuring process through which many warehouses will be restructured. The inventory will also be looked at once again. So many things are happening at Ola's end. But this problem is the fresh one, because this kind of insolvency petition now Ola will have to deal with. If you talk about the company's response, it has said that it is going to take all legal, the automaker said it is strongly disputing claims made by Rosmerta Digital, and it has sought appropriate legal advice. So we expect this to linger a bit as far as legal process is concerned. The company said it will take all necessary and appropriate steps to protect its interest and object to allegations. So this is the response given by Ola Electric. However, the Rosemata is going ahead with its insolvency petition.
Okay, thanks Sumit for joining us with all the fresh updates when it comes to Ola Electric. That stock under pressure, 6.5% lower as we speak. But on that note, let's get kick-started with all the viewer queries. Joining us today in our studio is Kunal Bothra on the technicals, and we're also being joined by Gaurang Shah, the Senior Vice President at Geojit Financial Services. Morning to both of you gentlemen. Let's kick-start the query segment, and viewers take note of the plate that was flashing on your screen right now. Be mindful to send us the stock name that you want to get your query answered about, the exact buy price that you have paid while purchasing the stock, the number of shares you hold, the exact question if you want an outlook, if you're looking to sell, what should be the ideal sell price. So specify your question that you want answered, or if you are looking to buy a stock, then let us know the company name, the number of stocks you're planning to hold, the quantity, as well as most importantly your time period that you're looking to hold the stock for. So with that in mind, you can keep writing to us on the number that's flashing on the screen. That's our WhatsApp number. But let's get kick-started with all the viewer queries for the day. And Kunal, coming to you first, let's kick-start this segment. And our first query is coming in from Mr. Ikam Baraya from Hyderabad. The stock in question is CG Power today, and he's asking, is now a good time to buy CG Power at the current price for 6 months? What's your view?
Yeah, it could be a good time to buy CG Power for a time frame of 3 to 6 months, primarily because the stock is it's looking like that it's forming a base for itself around the 550 levels. It's now nearing the 600 plus mark as a breakout. I think the 3 to 6 months time frame kind of a target I would probably peg for CG Power closer to 660 to 700 levels.
All right, that's the view coming in on the technicals for CG Power. But this one, the other query is from Reshma Bhatia. She says that she holds 100 shares of Tata Consumers and she is presently sitting at a loss of 16%. She wants to know the fundamental view for this, and she wants to hold it for a period of at least 2 to 3 years. Coming to you, Gaurang, does it look like a good play? The fact that, now people are waking up to the consumption pack, especially the large cap consumption names. Do you see value in Tata Consumers for the next 2 to 3 years?
Honestly, we thank you very much for having me on the show this morning. Morning to all of you all. So,
there seems to be a technical glitch there. We'll get Gaurang back on Tata Consumers. But let me come to you on this, Kunal. How does Tata Consumer look to you on the charts?
See, I think over the last few months, we've seen the FMCG pack being at the brunt of some very sharp selling. Same was the case with Tata Consumers when the stock had fallen from 1200, 1250 mark towards, I think at one point the stock was sub 900 levels. Now it's trying to consolidate. My belief is that from a short to medium term play, the stock should consolidate over here around this 900 to 950 levels. But that could be a very good zone where medium to long term traders can look to start positioning themselves on the buy side. So I would probably suggest that buying on a staggered approach and more of a patient approach would be a better strategy for Tata consumers, and especially if you're a medium to long term investor.
Okay, so that's the take on Tata Consumer. Kunal, staying with you, we have our viewer Swati who's writing to us. Two stocks in question, Infosys and Dixon Tech are the stocks that she's asking about. She's holding 150 shares of Infosys and 20 shares of Dixon Tech. And for Infosys, she's facing a 20% loss right now. She's saying that her time frame is for 2 years, but what would be your advice right now? Should she reduce or should she totally opt out of both of her holdings? She can continue to hold for 2 years, but would that be a prudent choice when it comes to Infosys and Dixon Tech?
See, of course, long term wise, these stocks are very well placed. But then you also have to remember that there's a cyclical nature of these trends. For IT names, for example, currently what we are seeing right now, and something what we saw, for example, in 2021 and 22 start, when the IT index formed a major top, and from there started off almost like a 12 to 15 month kind of a cyclical correction to these names. I would actually believe that we could be at the cusp of a not a very similar, but I think more of a price correction as well as a mild time-wise correction for these IT stocks, which means there could be a potential where these IT stocks may correct by another 5% to 10% at least from current levels. So it depends on your risk appetite. Since you are a long-term investor, medium to long-term investor with a time frame of 2 years plus, I would believe that you can continue to hold on to these names, but then just about keep some powder dry in case if these stocks correct by another 5 to 10% further from current levels. That could be an opportunity where you may look to start averaging out.
All right, a good opportunity, a buy on dips for both the counters. But with that, it's time for us to slip into a short break. Don't go anywhere. We'll be right back after this break. We'll take some more queries and get them answered by experts. Stay tuned. Welcome back. You're tuned in to Buy Now Sell Now, where we're taking your queries and getting them answered by our experts. And you can write in to us on the number that's flashing on top of your screen. Let's get going yet again now. Coming to you, Gaurang. We're finally connected now to Gaurang. Gaurang, this query is for you. This person holds 50 shares of SBI at a price of 800 per share for long term. And this person also says that this person is a big fan. They have not written their name though. But what's your advice on SBI, and for how long can they be holding this stock?
Well, honestly, first of all, let me apologize. My connection was a little bit wonky, my Wi-Fi connection, so there was a little bit of disturbance. I hope my audio video is clear now. On State Bank of India, well, let me say first thing, when it comes to these kind of market conditions, which is very choppy and volatile, and we have been in a prolonged, last almost about 5 to 6 months, we've been in a downward trajectory. Beginning of this year also, thanks to FI selling and of course post the news from US about tariffs, markets are in a little bit of uncertain zone. But my sense is that since last week, our markets have been able to find a little bit of stability at around current levels. Having said that, these kind of corrections are great opportunities for portfolio building exercise with focus on large cap first, and especially banking and finance. My sense is that it needs to be a very crucial part of your portfolio. Numbers are concerned, well, our understanding at Geojit is that they have not been bad. Scope of improvement looks immense going into the fourth quarter, last quarter this financial year, and of course the new financial year starting 1st April 2025. We have a hold recommendation in case if you got it at higher levels, somewhere around 700, 725. I think if you have investable amount, you can add to your investment with an understanding that from current levels, your downside is extremely protected. So if someone wants to make a beginning, fresh investments, don't put all your money at one time. Start at current levels and in staggered manner, you can go on adding to it. Somewhere around 930 is the approximate target price on State Bank of India from a long-term point of view.
Gaurang, just want to come back to you because you said that banking and financials is a good thing to have in your portfolio right now. Our next query is on insurance. What are you making of this space? Because our viewer Ram is writing to us from Hyderabad. He's asking if it's now is a good time to buy HDFC Life at its current levels. What's your view? Because you're positive on banking and financials, but how does insurance play into your portfolio?
Before I answer that, let me give a prudent disclosure. Firstly, this morning itself via our company's YouTube channel, Geojit Spotlight, we have recommended SBI Life Insurance as a long-term investment idea. Our view on the insurance sector, well, it has been a sideways to underperformer. I don't think I'm wrong in saying that. historically speaking, Jan, Feb, March, the last 3 financial months, the flows in terms of premiums are at the highest level for life insurance related companies. And more importantly, post COVID, I think the Gen Z or the millennials have realized one particular fact, and even others have realized one particular fact, that you need to have a proper term insurance with a decent sum assured. And if you get a decent or a large sum assured, then the outgoes in terms of premium from your side to the premium insurance company is on the higher side. That means their income in terms of premium flows is elevated. Slowly, steadily, I think this awareness is going to pick up. And we have coverage, like I mentioned, State Bank of SBI Life, LIC, and ICICI Prudential Life. But please bear in mind, keep at least 2 years plus kind of a time horizon if you decide to invest in life insurance related companies.
All right, that's the view coming in on life insurance space. But moving on from there, Kunal, this question is by Revant for you. He wants to know that he's tracking ICICI Bank, HDFC Bank, and NTPC very closely. Wants to know the levels that he can get into these stocks, and also wants to know the stop loss for them.
I think all three of the names are very, very interesting, and I've been tracking these names too. So I believe that having a long strategy over here or a buy strategy could be beneficial for both or for all three of the names. Now, specifically, if I have to give support points for these stocks, then for example, for HDFC Bank, that will be closer to 1680 mark, where the stock over the last 1 or 2 weeks has taken multiple supports. So that could be a stop loss kind of a level for a trade. For ICICI Bank, I would probably believe that keep 200-day moving average itself as a stop loss. You don't need to go below towards that 1200 mark, because 200 DMA could itself be a good litmus test for the stock over the near term. And I think for NTPC, I've looked at the recent charts where the stock has formed a bullish flag formation. I would suggest keep 50-day moving average around the 320, 322 mark as a stop loss or a support for this trade. And you can look out for targets in the range of 5% to 7% at least for all three of the names.
5 to 7% upside and individual stop losses recommended by Kunal. Thanks for that. Gaurang, coming to you. Our viewer Sachin Rode is writing to us. The stock in question is Deepak Fertilizers. He's saying his buy price is 1,175 rupees per share. He's asking how long should he continue to hold this for? Would now be a good time to sell this stock?
Well, that's a very difficult one, and I think my sense is my good friend Kunal is in a better position to answer this. But let me give you a brief view on the fertilizer sector. I think there is a lot in terms of policy changes that the government has put in place, and by the virtue of that, fertilizer companies are likely to get benefited in coming years. We like the sector on as far as fertilizer sector is concerned. We have coverage on Coromandel International, and I think it was this particular company, South-based company. Positive with the view that the sector is likely to do well in terms of earning visibility. The only problem is short to medium term correction. The market has led to a little bit of pressure on these companies in this sector also. As far as Deepak Fertilizer is concerned, without giving any specific recommendation, I think the company's balance sheet is good. They are quite clear in terms of visibility, in terms of where and how they want to grow. And the growth path in terms of business outlook for future looks very, very strong.
Kunal, if you could help us with some levels on Deepak Fertilizers, how is that looking? Because now that we have a broad sectoral view, could you give us a stock specific view as well?
See, I'm very bullish on the stock on the long term charts, and I've tracked this name for the last many years, especially at a point when the stock was at 400, 450 mark, towards a point when the stock went up to 1000 plus levels. Now, I think even at current levels, I would be bullish on the long term structure. Yes, the stock could be volatile like many of the mid cap names, and especially in a tough phase of the market corrections. But I believe from a long-term play, I would look out for targets in the range of at least 1400 to 1600 for Deepak Fertilizers if you're a long-term investor. And on the support side, I would look at 800 to 850 as a broad point of a major support. And in case of the stock retests those support levels, that could actually be considered as points where you can look to average.
So moving on from Deepak Fertilizers to this one in the pharma pack. Gaurang, I'll come to you. This is Raju writing from Bangalore. He's purchased Jyoti Labs, 130 shares at the price of 478 rupees per share. Now he wants to know, he's already sitting at a loss. In fact, it's in the 6-month long corrective phase, corrected almost 40% since then. Is it good to buy more, average the price for long term, or should he exit and purchase some other share like a CG Power?
Jyoti Labs is basically an FMCG company. They are into household related, products, fabric upgradation, and they have a very strong brand called Ujala, if I'm not mistaken. Historically speaking, this company is based out of South India, South Indian state. It was concentrating on South market a bit, but then a couple of years back, they draw down a strategy which enabled them to put their footprints into other parts of India as well, other states of in India. They have grown well. We have a buy recommendation on Jyoti Laboratories from a long-term point of view. Our targets currently that we have set aside approximately somewhere close to about 395. In case if you got it at higher levels, then you can average maybe it's closer to about 310 or 300 if you get a dip into the market and hold on to it. This entire FMCG pack, after what the Honorable Finance Minister has done in the budget, our sense is that FMCG related companies, whether it is discretionary or non discretionary, will see momentum coming in at ground levels in terms of consumption moving up post on third quarter, that is October, November, December 2025 this year. So you need to be a little bit patient with FMCG stocks.
Okay, Gaurang, thanks for that take coming in on Jyoti Labs. But Kunal and Gaurang, stay on with us. We'll keep it going with viewers' queries just on the other side of this very short break when we return. Hi there, welcome back to Buy Now Sell Now. Let's keep it going with all the viewer queries. And Kunal, coming to you. Next query coming in from our viewer Venkatesh, who's writing to us from Tirupati. He has purchased 50 shares of Voltas at around 1400 rupees per share. He's asking, would now be a good time to exit his holdings or continue to hold this stock? Now, summers are also here. Fundamentally, this stock should be in a good period right now, but on the charts, what's it looking like?
Yeah, I think it's a tough one because frankly, I think at current levels there could be a point where the stock may come back towards say 1460 to 1480 mark on the very short term basis. But on the downside, I also believe that the stock has good support at 1400 levels. So there could be a retest of that 1400 mark before the stock actually makes a comeback of sorts and then comes back to that 1460, 1480 mark. So what you can do is maybe trail your stop losses on this trade and then hold on to the stock for higher targets. I would believe that there should be a potential at least a couple of percentage points further from current levels. It's what you can expect to the very near term.
All right, moving on then. Kunal, this one's also for you. This person wants to know, so this is Sujit writing from Kolkata, wants to know if it is a good time to enter Oil India and Geo Finance for the medium term. Geo Financials, Kunal has corrected fair, but in fact 36% it has corrected in the last 6 months. Is it a good time to enter for Geo Financials and also Oil India? Even that is corrected around 39%. Good time to enter these counters?
Yeah, it's a good time to enter both of these names. Oil India specifically, I think that stock around the 350-60 mark has formed a base. Again, a stock which I think on a short term basis is due for a mean reversion at least over the very near term. You might expect the stock to head towards at least a 400 to 450 mark over the near term, and then depending on the markets, if the markets also start to improve, the mid cap in the market starts to be a lot more better, then we may expect that the stock may actually come back to that 500 520 plus mark also over the near term. Same is the case with Geo Finance. I think the stock has been beaten down significantly from 350 plus levels towards I think 200 or 205 was the low the stock had made very recently. So again, a stock which I think over the short term in charts indicates that the 200 mark is a very strong support, and that's a zone where I believe long term traders could look to start accumulating the stock. So I believe it's a good play for both of these names, Geo Finance as well as All India.
Okay, that's the take coming in on both of those stocks. Gaurang, coming to you. Next query coming in from a viewer Padma Sivara, who's writing to us from Bangalore. Stock in question is Kotak Bank. He holds 20 shares at 1800 rupees per share. He's asking, should he book profit right now or wait a little bit more? In fact, he wanted to wait till the stock crosses 2000. It's right there. It's at 1991 right now. So now would be a good time to book his profit and exit, or do you believe Kotak Bank also is a player for the long term?
Honestly, I always advocate one thing, that if investment is an art, then profit booking is also an art, because eventually you invest in any asset class so that you can make something out of your investments, X plus something. Now, whether to book profits or not, I know I've said, I realized one thing, even if the stock, Kotak stock has to go to 2000, Some investors will not book because the greed always plays in your mind, and then suddenly you will see market correction coming in, then there are profitable investments going into loss. So you need to put a full stop as far as your greed is concerned. Understand what kind of return you want to make, a reasonable percentage, and as and when you get that, you should at least book part profits. Now on Kotak Bank, we have a positive coverage, and in fact, the target price that we had, the stock is trading much above those levels, but we are maintaining a hold. Excuse me. We have fourth quarter earnings curtain raiser either from 10th April onwards or after that. And like I mentioned, banking sector, we expect to perform well for the fourth quarter, given the opportunities that are in the backdrop and especially the asset quality improvement. And for Kotak Bank, third quarter was much better than what the street estimates or our estimates were. So my understanding that fourth quarter will be even better. But I'll again repeat one thing, that you need to decide what kind of returns you want to make from your stock market investments. And as and when you get that, you should at least book part profits.
All right, that's the view on Kotak Mahindra Bank. But I'll come to you, Kunal, for this one. This is Ignatius, who's writing from Kolkata. He's bought L&T Finance for 142 rupees and he holds 40 shares for this. Wants to buy more for a period of next 6 months. He wants to know the stop loss and the targets that he should watch out for on L&T Finance.
See, broadly, I think 130 could be a decent stop loss for your time frame for L&T Finance. Now, I understand that the stock is still trading to a lower band, but I think 130 could be a good zone where the stock over the last many weeks has gone through a double test or a triple test in terms of a support. But on the upside, I would believe that 154 could be a first level of target on the upside for L&T Finance if you have that kind of a time frame of 6 months plus. I also believe that there could be a possibility, because we are at a point where financial services as an index has been doing fairly well. Of course, it starts off with maybe few stocks being leaders, but then quality names like L&T Finance eventually make a comeback for themselves. So I think it's how the markets would probably view the entire FinServ sector. I believe that 155 could be a decent short to medium target for L&T Finance.
Kunal, while we're talking about L&T group of companies, we have a couple of questions coming in from our viewer R. Ganesh from Bangalore. He's talking about L&T Limited, LTI Mindtree and another stock that's Zensar Technologies. He has a 5-year long-term target for all of these. He can hold these for 5 years. What's your view on all of these 3 stocks, LTI, Mindtree, L&T as well as Zensar Tech?
See, L&T Infotech, Mindtree, and Zensar Tech, both of them, they come into the IT space, and I think over the last many weeks I've been highlighting that I'm not extremely optimistic on the IT stocks over the near term, because I expect that these stocks would probably continue to correct further for some more time. At least now the 5% to 10% correction is what I would expect for many of these names over the near to medium term. So I would probably give it a skip for these 2 names. For L&T, I think that's a stock which I think has done reasonably well, and even in this leg of correction, as I was looking at the relative price performance, it's done relatively well, better as compared to its other peers like Siemens, etc. So I believe L&T at current levels is a very strong buy, but for L&T Infotech, Mindtree as well as Zensar, I would suggest an avoid as of now.
All right, with that, it's time for us to slip into a short break. You don't go anywhere. We'll be right back on the other side with your queries. Stay tuned. Welcome back. You tune in to Buy Now Sell Now, where we are taking all your queries and getting them answered by our experts. Let's resume then. Coming to you, Gaurang, this one's for you. Sandeep is writing from Noida. He holds 100 shares of Bajaj Consumers. He's bought it at 280 rupees. He wants to know the long-term view for Bajaj Consumers.
Well, unfortunately, we don't have a direct coverage on Bajaj Consumers, hence I will not be in a position to answer this question. I'm sorry.
Can I take this question to you then? In that case, what is your view on Bajaj Consumer? Good level to enter, and is it a stock that's worth holding for the next 1 or 2 years?
I definitely think so. Now, I understand that the stock is at its 52-week lows. I think, if I'm not wrong, at a multi-year low also at levels of 160. But I believe that the stock holds a lot of potential on the longer term basis. The long-term supports for the stock, which it tested, I think, in 2022, was around the 130 mark for Bajaj Consumers. I'm not expecting that kind of a correction further for the stock over the medium to long term. But I think in case if the stock happens to come back to that kind of a territory, that could actually be a zone where you may look to average or accumulate further. But I believe that at current levels and on any dips, it could be a good long term buy.
Okay, but Kunal, our viewer Sandeep, who's written to us about Bajaj Consumer, has bought this stock at 280 rupees. Now, the stock is nowhere close to those levels right now. Do you believe that in the near or longer term, this stock could even test those levels, or would now be a good time to just either average his holding or just book out his loss entirely?
So just hold on to the stock as of now. I think averaging out would probably happen once the stock reaches those support points which I flagged off around the 130 mark for Bajaj consumers. But as I said that the chart patterns are not very negative for the stock. Yes, it's gone through a correction, but I believe that whenever the stock makes a comeback, the first level of target which I would anticipate for Bajaj consumers would be around the 250 mark. So I think it's about being more strategic, strategically poised over here. If you can average out closer to 130 marks, say in case if there is a correction further for the stock, then your average price drops to 200 levels or thereabouts, and that could probably help you gain when the stock moves up higher and touches those levels of 250 plus.
Okay, got it. So that's the view on Bajaj Consumer. Sandeep, I hope that answers your query. Gaurang, coming to you, our viewer Srinivas is writing to us from Bangalore. He's planning to invest 25,000 rupees each in Dr. Reddy's Labs and Natco Pharma. He's asking, kindly suggest, is it the right time to invest for a 2-3 year time period? From the pharma pack, are you liking these two names, Dr. Reddy's and Natco Pharma?
Well, firstly, on Dr. Reddy's, we do have a positive coverage from a long-term point of view. And of course, on Natco Pharma also, we have a positive coverage. Look, the problem is Trump trade tariff tantrums, right? And this is also one of the sectors which has been mentioned by the US president in terms of certain tariffs related, issues that may come into effect in the future. How much of it is going to impact, only time will tell. We don't have much clarity as far as that is concerned. But as far as the domestic market concerned and markets minus US is concerned, there is a lot of opportunity for both these companies and Indian pharmaceutical companies, the sector overall, to perform well. So if you have a long-term horizon, I think first of all on Natco Pharma, we've seen some price correction because of some news flow. Even on Dr. Reddy's because of this hanging sword in terms of tariffs on the pharma sector, Indian companies. This stock has also corrected. He has about 25,000. I would say break it into two equal parts and invest in these two companies from a long-term point of view. And don't stop over there because your number of shares that you will get because of the capital that you invest will be very, very low in terms of numbers. If you have investable amount in future, you can add on to these two stocks.
All right, moving on then, coming to Gaurang, I'll stay with you because Ramu's writing from Bangalore and wants a long-term view on Bharat Forge. Now, he's bought 100 shares at 1,087 rupees. Wants to know the long-term view for Bharat Forge. Should he hold this or should he come out of it at these levels?
My view is that for earlier being Bharat Forge being a pure auto ancillary play, and now because of its investments into other related companies, subsidiary companies, defense is also a big part for Bharat Forge. Class 8 truck exports has always been a big driver for Bharat Forge, Forge's earnings visibility. There have been a little bit of downward move in the demand as far as the Class 8 truck chassis are concerned from the US. We have a buy recommendation Bharat Forge from a long-term point of view. And the targets that we have set aside from a long-term point of view is approximately somewhere close to about 1,560. So there is a long way to go for Bharat Forge, and the risk reward is extremely favorable at current levels.
Bullish view coming in from Gaurang for Bharat Forge. Kunal, next query is from our viewer Ashish Parak, who's writing to us from Mumbai. Two stocks in question, Coal India and REC. His time horizon is 2 to 3 years. He's asking if it's a good investment for mid-term growth opportunity. What's your outlook, Coal India and REC?
Very bullish on both of these spaces, both of these stocks. So I think over the last many weeks, I've been pointing out that there are many PSU names which have been low beta to moderate beta or even high beta stocks, but they've corrected or gone through an exaggerated correction, and that's where I would believe that long-term opportunities would probably lie. I would believe Coal India at current levels as well as REC, and I think we can even club PFC in a very similar manner. I think these stocks would probably look very attractive if you're a long-term investor. So would suggest a buy into these stocks at current levels also.
All right, a buy coming in on these counters. But coming to your Gaurang, then Dilip is writing from Odisha. He has 50 shares of CDSL at an average price of 1,255 rupees per share. He wants to know if he can wait for another year. Should he average in or should he opt out at these levels? I mean, CDSL also, capital markets is a good theme, but it has corrected fair bit of like almost 27%. So at these levels, should he really average in or he should be opting out at this point?
I'll stick to the investment theme in terms of Indian capital markets or Indian stock markets. This is primarily because we don't have coverage on CDSL. So my view is that if Indian capital markets or Indian stock markets are going to perform well after this uncertainty gets over, done and dusted, and we have more positivities in terms of earning visibility, GDP growth rate, interest rates coming down, and of course, flows coming into the Indian market. If your view is that we are going to do well for the next 3 years, 5 years, or maybe even more, then all those entities which are related to the Indian capital markets or Indian stock markets, especially companies which are into platform providers or service provider or intermediaries, all these companies will do well on fallback of good performance from Indian capital markets or stock markets. So if you have investment in strong companies, irrespective of what level you got in at higher level, a long-term horizon, you can definitely keep that kind of perspective in mind. And in respectable companies, I won't give any specific names, but if those names have a prominent visibility and a dominant player, then you should not hesitate to even increase your investments. Again, I will not give specific names because we don't have coverage, but we remain positive on the Indian capital markets or stock markets.
Bullish outlook coming in on the entire theme in which CDSL belongs. But Kunal, coming to you, our viewer RK is writing to us on RBL Bank, Delivery and Aarti Industries, 3 stocks in focus, and he's having a loss ranging between 10 and 20% on all 3 of these names. Should he book losses? Should he continue to hold, hoping for better days ahead for all 3, RBL, Delivery and Aarti Industries?
So out of the 3, I would believe that Aarti Industries is something which you can hold on. My sense is the stock could be forming a decent base for itself on the longer term basis. Delivery is the other stock which I believe from a short term play, I think you can expect a trading pop. I think it's trading at 240 thereabouts from current levels. You can expect maybe 265 to 270 as a trading range. That's where you can look to maybe consider or reconsider your decision if you want to exit. RBL Bank is something which I would believe that it's better that you start switching from this stock to large cap private sector banking names. Something which I would recommend would be ICICI Bank or Kotak Bank at current levels also.
All right, moving on then. Coming to you, Gaurang. This is Rakesh writing from Mumbai. He holds a Precol, 715 shares of Precol at a price of 212 rupees. He wants to know your outlook for the next 5 years on Precol's business. He wants your advice on whether he should hold the stock or whether he should be selling it.
I'll leave it for Kunal to answer this question. We don't have coverage on this one.
Coming to you then, what's your view on Precol? He's bought 715 shares at a price of 212. From here on, is it a hold or is it a sell?
I'd say it's a fantastic chart. I've been tracking this when I remember I think the stock was at 45-50 rupees many years back, towards the point when the stock has gone 10x. After such kind of a move, of course, you expect that the stock would broadly consolidate. I would suggest that it's a good time where you can look to book 50% profits at least on the stock. Trail your stop losses, say closer to 370, 360 for Precol on the longer term basis for if you're long term investor. And on the upside, I would believe closer to 500 mark is where you should look to book out full profits on the stock.
Okay, so that's the view on Precol. Kunal and Gaurang, thank you so much for taking the time out and joining us on the show. I'm afraid we're completely timed out on this edition of Buy Now, Sell Now. That's all the queries we could accommodate today. But viewers, we'll see you tomorrow at the same time at 11 a.m. Please keep writing to us and we'll try and address all your queries tomorrow as well with a fresh set of guests. But on that note, it's a goodbye from Ankita and me. Markets at Noon is up next.
If you like this video, then like, share and subscribe to ET Now.